Hi, Brian. Hi, Lauren. Thank you so much for coming on the show.
Morning, Andy. Great to be here.
Morning, Andy. Thanks for having us.
So, I know you guys really well. Very excited to have you here on the show today. Really, really excited to talk about the Skaus House brand and what you guys are doing. Now, of course, you're members of the mastermind, so we've been working together for a while. I really would like to share, with all of our listeners, what you guys are doing and the strategy and the way that you're approaching your property business. Because I think, in some ways, it's quite unique. A lot of our guests on the show are sort of die-hard HMO investors, and the approach you've taken is slightly different. And actually, that's why I really wanted to get you on the show today. So perhaps just sort of from a bird's eye view, Brian, could you tell us and our listeners a little bit about what you guys are doing, where you are, and kind of what Skaus House is all about?
Well, great. Thanks, Andy. So we are Skaus House. We are a property business based in South Liverpool. There are two parts to our business, so our own property investments and also a construction and project management service for other investors. As the name suggests, we're hugely passionate about Liverpool, and with that being the case, we're really focused on quite a small investment area, really close to home, within probably about 2 to 3 miles. What that therefore allows us to do is really flex our strategy while still being really efficient, so not overcomplicating things too much. So we built a strong buy-to-let portfolio. We've more recently focused on flat conversions. Our current project, we've got a flat conversion and commercial units on the ground floor. And our next project is in legal, so that'll be completed shortly. And that'll be an 8-bed student HMO.
Well, I mean, I think the approach that you've taken, and particularly the kind of the method through the buy-to-lets is really interesting. Obviously, I'm very pleased to hear that there's an 8-bed HMO on the horizon, and you're not starting small. That's a biggie. But yeah, it's this approach that you guys have taken. This sort of, I suppose, multi-pronged approach to different types of properties. And like you said, having that flexibility to look at different types of projects, but the focus very much being where you invest. And I think this is really interesting. So, Brian, you mentioned, I think you've got a couple of different facets to what you do, the business. One is your investment piece, which I assume is your buy-to-lets and your the flat conversion. We're going to talk about a fantastic case study today, and then your other development projects. But the other arm of your business is project managing and construction, and actually helping other investors do these sorts of projects as well. Have I, just so I can have got a really good grasp on exactly what it is you're doing? Does that sound about right?
Yeah, absolutely. So over the last 5 years, with our own projects, we've amassed a huge amount of knowledge and experience, and we've just seen the opportunity to deliver that for other investors looking to invest in Liverpool that might not necessarily have the resources or the expertise with the local trades and local suppliers, or even kind of property professionals. So we've seen that as a huge opportunity that we can offer that.
Well, I've definitely got some questions for you guys today about project management. I know for a lot of people, this is one of the areas that they really struggle with. I mean, I've been doing this for 12, 13 years, and managing projects, managing people, managing sites is still one of the more challenging aspects about this. And actually, I think it's where a lot of the risk lies. So I'm really keen to circle back and ask you a few questions and get some of your advice on this. But Lauren, before we sort of hit record today, you said that you guys started with the end in mind. Like, before you actually started investing and buying property and making the decisions about where and all of that sort of detail, you looked at where you ultimately wanted to be, that very long-term objective. And I think you said that you reverse engineered everything. So can you tell us a little bit about this process, what you guys actually decided together, and how that sort of, I suppose, led you to where you did kick things off?
Yeah, sure. We became accidental landlords in 2016 when we inherited a property in Glasgow from my late father. And we knew at the time that we wanted to use the equity in that to invest for us. And property just felt like the right route for us to invest for the long term. We loved the short-term cash flow, the long-term value gain, and also the ability to leverage against it. So at the start, we were really thinking about long term, thinking about retirement and building wealth for us and our family. So we focused on buy-to-lets in the first instance because cash flow wasn't a huge driver at that point in time. On location, we actually learned the hard way in that our first project we bought was in Glasgow, and we lived in Liverpool. And we did all of the works ourselves from 200 miles away, and learned not to do that, and to invest really close to home, and to always use professionals where you can. So, but huge learnings from that, and we don't regret it because we did every part of the works ourselves. It stacked up really nicely for us, and we've had the same tenants in there actually since 2017. But that really meant that moving forward, we were really clear that a non-negotiable for us was location.
Yeah.
Because if you're trying to manage a property business, as I'm sure many of your listeners will know, on top of careers and family and life, there's got to be some areas where you don't make it even harder on yourself. And for us, location was that kind of flexibility that meant it could work within our life. So over the next few years, we really focused on buy-to-lets in a really tight area, as we said, and we were able to buy those well, add lots of value through big refurbishments and great design, refinance them, take that cash out and continue to do that. And it meant that we built up, a good, strong base of buy-to-lets that actually covered Brian's salary and enabled him at that point to leave work, which was last year. And that's where things, we really started to accelerate things, both in terms of looking at much larger projects, but also, rebranding, launching the project management and construction service with a bit of a soft launch, and really thinking about how we want to scale the business moving forward, which is where we are today.
So I think it obviously sounds like your first property, you became accidental landlords, like you said, but actually the way that things have unfolded, the types of projects and the location and the progress that you've made has obviously been very well thought out. This is a really clear plan that you have. And actually, I don't think that this is something that I hear that often. A lot of people tend to kind of just go from one to the next, almost sort of drifting the way through and end up with a portfolio, sometimes a scattered portfolio, something that looks like it needs some consolidation, something that doesn't necessarily suit that very personal long-term objective, which is, I don't know, for many of us, certainly for me, it was having the ability to choose when I would go on holidays, or whether I wanted to or didn't want to work weekends. Just the really simple things like that. I suppose having that freedom of choice. But I remember myself, I started a bit like that, and then it took me a little bit longer to figure that bit out that you guys did in a year, but it took me about 4 or 5 years to figure out, actually, I need to really get a grip on this and make some very strategic decisions about what this is going to look like, the types of properties, the location, and ever since then it has been much easier. I mean, it's definitely still been difficult and been challenging, but it's much easier with that very clear plan in mind. One of the things I never did though was single lets, and I did often think about it, and even now I think about doing single lets. But tell us a little bit about that. How important have those single lets been? Because I think there are a lot of people out there that worry single lets won't necessarily help them get where they want as quickly as they need to get, or maybe single lets can't make enough money these days. So can you tell us your experience of single lets and how you actually were able to engineer those sorts of deals to kind of, I suppose, move you further and further towards your longer term objective? And I suppose that short to medium term piece was getting Brian out, which you've done, which is amazing. So just tell us a little bit about that and those sorts of deals, if you would.
Yeah, I think it's single lets have really helped us build confidence, I suppose, and helped us scale in a really kind of sustainable way, in a way that's not full of risk in our minds. So by building up slowly, we've built a lot of experience in managing refurbs of all different sizes, and then can take that knowledge and expertise onto bigger projects now. But for us, single lets can work really well, and we're hugely passionate about them in a lot of ways, in that refurbishing really high quality and creating super high quality products in the right areas has allowed us to break ceiling rents every time that we bring a new property to market, and albeit the cash flow isn't as significant as HMOs can be. For us, that balance of cash flow versus managing, ongoing management of the properties has worked really well for us so far. And we've got some buy-to-lets in the portfolio that trade really well.
Yeah, and in terms of the investment, we go back to brick from the beginning. That's always been a plan. So we purchase from auction, properties are in really, really poor condition. So we invest up front as much as we can for that kind of strategy. So we develop the product, then we advertise it, and then hopefully the tenants are happy in there for a long period of time. All the bills are covered, so there's less risk for us day to day.
Well, I mean, looking at the photos from your case study that we're talking about today, I mean, they are incredible. They are, I think, to do something now, in 2022, that is completely unique, really kind of stands out as being a unique concept, very easy to identify who it is, like have that sort of that strength of brand, I think is really quite special, and you guys have absolutely nailed it. I can only imagine your tenants love living in your houses. But tell me, and I want to talk about the brand because I love the brand. But just tell me, at what point HMOs started to feature in the plan? Were HMOs always part of the plan, or is that an idea that has evolved? As you've been going along, maybe as you've met more people in the community, as you've seen other people do things on social media. What point did the idea of HMOs kind of hit you?
Well, when we first started investing, we weren't really educated at all. We were had just started listening to podcasts, and Instagram, and that property community was just starting to grow. So we did what we knew at the time, and educated ourselves along the way. And higher cash flowing strategies has always been something that we've been mindful of and wanted to explore. But at the time, as I said, we focused on buy-to-let. So the big kind of eye-opener for us was really when we invested in our own education and spent time with mentors. We were part of Jade's B-Space mentorship program, and then obviously on the mastermind as well. And those types of kind of learning experiences really open your eyes to what you don't know, and there's so much we don't know and so much we're learning, and for us that's really exciting because it just constantly presents new opportunities to us.
And particularly that we're going through legals at the moment, obviously using our experience, the property itself lends itself more to a HMO. That's the location, it fits that student demographic, so we're able to flex, consider multiple options for each individual property that we're considering.
Well, I want to move on to this and I suppose the skill and the experience that you guys have developed by doing these different types of projects, and also how you're using that and leveraging that in your trading business, which I guess is your project management sort of construction business. So, Brian, tell us a little bit about this. I think before we kicked off, we discussed this briefly. Project management is a tough one. It is very difficult. I think in the current climate as well, it's incredibly difficult. And with prices going up, and there's been issues with materials the last couple of years, it's a real challenge. Is it part of the project? Is this part of kind of the I suppose the property development business that you enjoy? Do you like kind of getting stuck into the sites and doing that?
Yeah, 100%. That's my passion. That's what I've loved from that first little 2-bed flat that we did, where we did everything ourselves. That's being on site and seeing that project evolve is really rewarding. It is the challenging bit really to ensure that the plan from start to finish is delivered. But I think if you've got that plan in place and you break it down into stages, then it's taking bite-sized chunks. Every day you're facing challenges, questions from trades, people letting you down and things like that. So it's a constant problem-solving role, which I enjoy.
And I'm familiar with. I mean, what advice would you share then, Brian? For someone perhaps embarking on their first project, their first sort of 3 or 4 or 5 bed HMO, perhaps. What advice would you share about actually getting into that and preparing to take on that sort of a challenge?
So education is a big piece. So listening to podcasts, reading as much as you can about the local authority. But the big thing is plan. Have that plan in place. But I think have that plan 80% done, because things change all the time. So you can't do a tick box exercise and go through the list and go, that job's done this week. Things move forward, things go back, availability of materials. So having that structured plan is key, but being aware that it will need to flex up and down. And I think as well, depending on the level of works that you're doing, try and budget for as much as you can. So for everything. So obviously stand outside and does it need a new roof? I don't know. I'll put X amount in for it. So it's really, really exploring each element of the property and going, I've allocated the price or the cost, rear yards, landscaping, outside, all these things add up, but you just got to take a step back, look at everything, plan it, budget it, and if you save on something brilliant, that goes into the bathroom budget or the kitchen budget, so it could spend elsewhere. But
it definitely goes somewhere else, doesn't it?
Definitely. And the big thing that we did up front was invest in the right team. So you have that strong team behind you, and don't be afraid to really challenge people and set the expectations, set the standards, but also be brave enough to move on to somebody else or try somebody else, because you never know, is this the best person I'm working with? There's someone better out there. If there isn't, you can go back, but it's being brave enough to explore and just expand that network of people, because they help you build, and that's what you need.
There's some great advice there, and I can really resonate with that. Actually, I think I speak to a lot of people who are doing multiple projects and often rely on one builder to go from one to the next, and at times like those we're in now, where builders are in quite heavy demand, they're often pricing with that in mind. And obviously things are changing very quickly. Things like interest rates and inflation, there are consequences to that, outside of the project itself, that we've got to think about. Speed and getting projects done as quickly as possible, it becomes more important than ever to do that. And I completely agree. Actually, I think you've got to be prepared to take a very sort of clear stance on certain things with contractors, where you think a particular price or a particular, let's say, extra or addition is unfair. And I think a good example is on projects, there are often areas where we do spend more than we had budgeted for, and that's why we have a contingency, so that there's reasonable extras. But at the same time, there's often areas where we can cut back and we can save things. Actually, if we don't put that partition there and we put it here instead, we can save with this steel. And I think I've learned from some of my business partners that actually there are good methods of managing people that help you strike that right balance. And I think often it's being able to communicate it, but I think being bold enough in the first place to do it. I think a lot of people are a bit anxious or worried that the builders will throw the toys out of the pram and walk off site. And of course, there is always a risk of that. But I think there's too much at stake to not have those sometimes tough conversations, and make sure that people do understand that actually it's your site. If you're running the site, they report to you. You ultimately make the decisions. So I think there's some really good advice there. I actually think right now, that has never been more important. I think it's so imperative that we keep on top of projects and project costs and tradesmen and things like that. With this business then, Brian, tell us how this feeds into the rest of the business. I think I understand this. I know this quite well, because obviously we work together on the mastermind. But I love how this business model sits adjacent to your own investment business, almost like an extension of what you're already doing. But tell us a little bit about this. This is a model that I think so many people can learn from.
Yeah, definitely. It's kind of evolved over time, and we've just seen the opportunity there to support other people. So it makes us more efficient as well. So we've got our own projects. At the end of the day, we're investors as well. So 100%, we've got the same targets and expectations as any other property developer or investor. and it's just making sure that we are moving it forwards.
Yeah, I think over the last 5 years we've built, as Brian said earlier, great relationships with a number of trades and professionals. We know the area inside out. We know all the trades people, and using that to help other investors. One makes business sense for us, but also it helps us keep the trades that we really rely on, some of who work exclusively for us, as busy as possible, and helps grow their businesses as well, which is important, for these companies and businesses that we've built up great relationships with. It's a partnership at the end of the day. So we see huge value in that. I think, Liverpool's a great city to invest in. Obviously we're partly biased in that, but I think there's a lot of people that agree. And we've, seen again firsthand how difficult it can be managing projects when you're not on the ground. And, there's a service there that we offer that we feel would add value to a lot of investors who invest remotely.
I think that overlap of what you're doing for yourselves and what you can do for other people and continue to monetize that is just brilliant. It's something that I've spoken a lot about actually on the podcast when I've talked about my own businesses. For me, we were buying and investing in a lot of property ourselves, but we couldn't buy everything, as nice as that would have been. So actually we were able to help other investors, and by doing that, we're able to monetize that. We had an acquisition service, and then we kept our trades really busy. That'll help with the brand and the business. We could grow that. We were developing opportunities and our network with people locally and sort of more broadly. And that was one of the things that really helped me take my businesses to, different levels.
Yeah.
And I think to some extent it seems counterintuitive. Well, why would I want to engineer myself out of a job to just give myself another job when really what I want to do is buy property myself? And I think we all get that, but actually, on if we're really honest, property is very capital intensive. Developing takes time. A lot of money is often locked up for a while, and so having businesses like yours, it's just a great way of keeping the cash moving whilst also helping with all of these other things. And I guess you also get to cherry pick the projects that you want, which is nice, a really nice position to be in at the end of the day.
And it's, in your own bubble, you can kind of feel like that might be competition in some way. But, when you take a step back and look at, just look on Rightmove at the standard of accommodation available, 95% of what's available to rent in our area at least is still incredibly poor. And part of our vision and mission for Skaus House is to improve the standard of rental accommodation available, and that's within our projects, but also more widely. And there is plenty room for growth in the area of good quality product, so good opportunity.
Let's talk about Skaus House then and the brand, because this is what you've wrapped it all up in. And I've got to say, I think I did already say it, but you've got one of the most eye-catching, sort of absorbing brands that I think I've seen for a long time in our space. And that is, there are some pretty great brands out there. There's some people doing great stuff, and you guys really managed to engineer something quite different, quite unique. Tell us about this then, because I think that you guys have obviously invested quite heavily in the thought behind this. Of course, actually going through the process of branding and creating assets and then using it and delivering it in the right way. And I think for a lot of people, that would be something that they might expect to come later, further down the line. But you guys have actually done it at perhaps a fairly early stage in your business. Certainly, when you look at the extent to which you've gone through a branding process, and I get this because I've learned this myself, particularly when we did the branding for the roadmap and the podcast. I learned a huge amount about branding at that time. But talk to me about that and that process and why you decided to do it and what it has enabled you to do as a result of it.
Yeah, branding's an interesting one, and I suppose in some ways a bit like education. It's not something you can kind of put on a spreadsheet and tangibly measure the results of.
So true.
Therefore, it can easily, and us included in that, kind of go to the back of the list or not be prioritised or feel like it's worth the money. But we can we say all the time it's one of the most important things we did for our business, and relatively we did it in an early stage, but we almost wish we did it sooner as well in some instances. I think what it's done for us it hasn't, the mission and the vision of our business has always been there in us. It's it's our DNA and it represents us, but prior to the brand, it was much more difficult for us to articulate who we were, what we stood for, what was important to us. Whereas, bringing it all together in a branding exercise, of which the visual part of it is obviously a big part, has just really helped us articulate that much better. Because we wanted our brand to reflect us as people, but also, Liverpool and the city that we're passionate about and that we invest in. So, we wanted it to be fun and vibrant and not take itself too seriously, very much like, the people of Liverpool, but likewise, have really high standards and stand for quality and, strike that balance between great quality, high-end products, but also in a really kind of tongue-in-cheek, fun way, because, we don't take ourselves too seriously and we didn't want our brand to either.
I mean, you've absolutely nailed it, and I completely agree with what you said there, Lauren. When it came to the actual process itself, was this some? Did you have clarity on it beforehand? Did you have ideas of the way that it would look and function and speak, or was that all a new process to you that you kind of had to learn and figure out as you went through it?
Yeah, I mean, we're quite visual people, so the idea of branding to us isn't alien, but we were by no means experts in it, and I think for us, when we're not experts in an area that requires a lot of focus, we engage with experts. So part of the mentorship program I did with Jade included the branding exercise that helped us pull it all together. And then we passed it on to an amazing agency who, helped bring it to life. And they did, we articulated our vision about who we are, what the brand is, what we wanted to stand for. But, they really helped bring it to life, which I think, we just struggled doing ourselves.
Yeah, and in terms of pulling everything together, they came back and presented one option and said, "This is Skaus House." And it was amazing. You were expecting, I'm going to get 10 or 12 different options. I like this, I like this, I don't like this. But they brought it back and said, "What you've told us, we've met you guys. This is Skaus House," and that was it. So it was, it's fantastic.
Do you think it's helped you build relationships? Does it help with things like raising finance and sort of igniting those kind of conversations as well?
Yeah, I think it helps at all touch points in terms of, whether that's trades, whether it's potential investors, in some instances, potential customers as well, and tenants, and we've been contacted a few times in that way as well. But it really helps people find out a lot about us really easily, because we can visually demonstrate that, whether that's through our website and a lot of the marketing we do, or whether that's through our projects and the identity kind of, falls through all of the touch points.
And it does really stand out. So any project that we've got on at the moment, we advertise heavily outside. And that just opens conversations to people. I go view properties and I say, introduce myself, where I'm from, and like, "Oh, you're doing such and such down the road," or talking to another investor that's bought a property a few doors down. He's like, "Oh, I'll check you out on the website. That's fantastic what you're doing." So it really explodes the kind of appeal and awareness of what we're up to.
And of course, I want to move on and talk about your case study, because your brand is just threaded through this as well. So it's wonderful. It's so great to see. Obviously the palette and the style and that kind of playfulness and that, I suppose, product that you described when you were talking about the brand, Lauren. It's so clear to see in your actual product there. as well. And so I'm thinking from an investor's point, potential investor's point of view, or perhaps someone who might be interested in using your services to maybe run one of my projects. I see this, and immediately it's obvious to me what you guys are about, what you're capable of doing, where your values are. Let's talk about this project. So this is unusually for the show, not actually a HMO. The next one is going to be the HMO, but I wanted to cover this one because it just looks so good, and the numbers are great as well. This was it's a block of 3 flats, isn't it? And am I right in thinking that this was originally sort of a couple of flats? You've managed to create a third unit and develop it.
That's right.
So headline numbers then. Purchase price was 115,000, something like that, and you spent a whopping 134,000 on the refurb, which well, I guess with it's flats and you're splitting units and things like that, it's perhaps not as big, but it's still a big chunk of money, isn't it?
Yeah.
And you were all your costs for about 260,000. And you got a nice revaluation at 300,000. That's given you a great return on your capital employed of about 20%, and it cash flows incredibly well, sort of making about £1,200 a month, and that's after all of your costs and things like that. So, tell us a little bit about this project. I mean, how did you find this project in the first place? Because I know you guys have got some fairly creative and quite effective methods of finding deals. Was this one of them?
Yeah, absolutely. So this property, like I said, a few minutes away from home. I think we were out in the car going out for a family day on one Saturday, and we'd actually seen the property advertised on the local auction. So as we're driving past, Lauren spots that the door's open. So it's like, do a U-turn, park outside. So I managed.
Is this unusual for Liverpool then? I've heard the rumours, but
yeah, the door's open. You're welcome to walk in.
That's the rule.
Yeah, that's the rule. So I went in, and there was a guy in there clearing it out. Spoke to him, got the owner's number, and the owner came down within about 15 minutes, and we just had a conversation. Obviously, he was. We found out what was important to him, and the pace of the transaction, the sale was key, because he had something else that he needed to invest in, and we pretty much agreed a deal within a day or so to purchase it from him, and then we were able to complete within 2 weeks. So this was pre-COVID, so obviously timescales have increased significantly since then. But yeah, it was just a chance opportunity, going past the property, the door open, got the owner's contact details, and took it from there.
I mean, you say chance though, Brian, but I challenge you on that, because I would say you're probably driving around, might be on a family day out, but still definitely with a keen eye. What's for sale? I do it myself. Drives Gemma mad. In fact, I'm always pointing things out like, oh, look at that. I wonder if that's coming up for sale. But you stopped and got out of the car and sort of went in, and 99% of people would just never do that. They just wouldn't think to do it. Wouldn't think that they might be able to actually engage someone, or let alone actually manage to agree something off market. Do you think you got it at a price that would have been different if it had gone to the auction?
Yeah, 100%. So the key things that the seller, the property developer was interested in was the pace, and that we would deliver on the purchase. And just being able to have that conversation face to face just adds so much value. Subsequently, we've discovered he's a big developer in Liverpool. He's got loads of property in his portfolio, and we touch base every now and again, just saying, are you considering selling anything else, or have you got anything else that's coming up? And it just creates a bit of conversation, a bit of pipeline. I showed him round actually the flats when they were finished. He drove past, the door was open again, so he walked in. So I showed him round and was just kind of really enthusiastic about what we did, and really it was in a really poor state of repair, no roof, etc. So we'd done everything to it, and it was totally transformed. So he was suitably impressed, and which was great.
Tell me about the end value and how you figured that one out. Then I'm always interested in this. We do a lot of this, projecting out end values. It's a really important part of the appraisal process. But was that where you were anticipating it? Did you do better or worse than expected? And what sort of contingencies do you put in place? If perhaps it hadn't come in where you had thought.
It's a tricky one with flat conversions. Is there isn't always a huge amount of comparables. So, in the world of buy-to-lets, it's very black and white as to, or should be very black and white as to what the valuations are. But with this, we had a number of different scenarios just because of the lack of comparables. So, as we progressed through COVID, the refurbishment costs increased, but luckily the value did as well. And 300 was, we always push the boundaries, and the bricks and mortar value of 3 flats was a bit higher than that. So we pushed it to be higher, but we expected it to come in between 280 and 300, and 300 is a fair valuation. He actually valued it based on yield rather than bricks and mortar, which wasn't what the survey was commissioned on, but it just shows kind of showing those different scenarios and modelling those different scenarios of bricks and mortar, yield, and lots of different options, and just being comfortable that whatever way the surveyor goes, that you're going to be, or you should be within a reasonable distance. And ultimately, you can do all of the prep work. We do valuation packs, we present all the before and afters, we share the full schedule of works, all of the detail. There's always a risk, and in the project we just bought, actually, we had a disastrous valuation going into the bridging, and you've just got to deal with that when those situations occur. It's one of the risks.
And we planned as much as possible, so we'd got the each flat ready, we'd have them advertised. So again, we were pushing the boundaries and the rental value. So we just had 2 out of the 3 flats. We're going through due diligence with the tenants. They're paying this price, so it's just kind of having as much information to give that value on the day.
We've found in the past that the valuers often don't believe that the rents are achievable. So what we've tried to do now, where possible, is have them let or going through that rent process before the value, so that it's clear that they are.
Yeah.
I think it's an intelligent move, and it makes it difficult for them to question. They might, still revert to perhaps an average valuation of the area, but at least you're giving them something tangible.
Yeah.
Because I think a lot of us can be optimistic. I think naturally that's that's in many of our DNA as property investors.
Yeah.
I mean, it's a super project, and I can see very clearly why you're able to achieve rents that are sort of beyond the market or the previous market caps.
Yeah.
And it's interesting you talked about risks there, Lauren, and actually, things don't always go your way, and you just need to be able to adapt. I'm preparing a talk at the minute, and in that talk, I'm talking about some of the most important things that I've learned over the last decade from a lot of people who've built great portfolios in our industry. And one of the things I do talk about is risks. And I think investors like us need an appetite for risk. I actually do think that it's difficult to really have any sort of an impact without having quite a substantial appetite for risk. I think we can be very logic about things and put contingencies, and like you say, have methods of being able to manage those risks if things don't go the way that we hope. But I do think it's really important, and I think that I don't know whether you guys agree, but the more people I meet in the industry, the more I see that actually we are a group of people who are quite we do have quite an appetite for risk, and like some of the people I speak to are my friends, like, oh my god, why would you want to do that? And I see some of the projects, and we're doing something at the minute, and it looks like something out of a war zone, and you kind of get a bit desensitized to that. But what do you guys think? Do you agree, and do you have that same appetite for risk?
We couldn't agree more, and we were just reflecting last night as we were doing some prep for today about the risk we've taken, and we've probably become a bit less risk averse as we've progressed, and I suppose as the values of what we're dealing with increase. But we've taken some very calculated risks, would you say? And that we've bought properties at auctions, pending refinances coming through, and obviously there's a kind of 30-day completion on that. We paid back, a refinance came through on the day a bridging loan was due, so it was repaid on the day. There's been a number of things that ultimately we've taken calculated risks, and we've knew the cost of not doing of it not going our way. But ultimately, it's been properties that are brilliantly priced or great opportunities, and you've just got to take some risk. And I think just now, particularly in this in the world we're in at the moment, they say the biggest risk is leaving your money in the bank.
Well, I want to ask you a final question about this. I've really tried over the last couple of years on the podcast to keep everything we talk about all evergreen, so that it's relevant at any point in time.
Yeah.
But it's difficult at the minute to not ask people. Like it's just a question just kind of burning away, kind of the front of my head. I want to ask everybody, what do you think about things that are going on at the minute? Like, what are you going to do? Are you changing plans? Are you putting contingencies in place? So obviously, inflation's soaring. We're interest rates are on the rise. And it looks very likely that they're going to, that the pace of interest rates is going to increase. Things just look a little bit unstable, certainly more so than they have done in the last 10 years. How do you guys feel about this? Is it changing the way that you're approaching your business, the types of projects? Are you doing anything differently with this in mind? Are you worried, or what do you guys think?
It's definitely a consideration. I mean, it's impossible for it not to be with the level of noise at the moment, and therefore the risk. But what we always come back to is that we're here for the long term. We're here to invest in property for the long term, and we will manage our pace accordingly. So where kind of 6 months ago we might have been a bit more gung ho with continuing to scale the value of the projects. One of the things we are thinking about is not investing, but just keeping to similar values of projects that we've currently been delivering, so that it's a bit more known to us. Of course, buffers essential. Ensuring that you model in different scenarios of interest rates and you can cope with those types of increases. And as we said earlier, a level of risk remains. But I think in any industry at the moment, or as we said, even kind of holding your cash in the bank, there is risk that's unforeseen, and that's just the nature of the world at the moment.
And I think it pushes you to be more just challenge things more. So my current supply base, are they the right people? Because obviously costs are going up one side of things, you've got to evaluate your business on the other side. So it's kind of, how else can I make it more efficient? How can we adapt? We get economies of scale, do another projects. Can we get new suppliers on board? So it's just an opportunity to adapt. And I don't think, however, the risk appetite we've got, we'll never over leverage ourselves where it'll be a catastrophe if anything was happened. So I think you've always got to have that in your mind as well, as the rainy day, if that was ever to come, how would you fare?
I think your deal that's going to be available for everyone, for all of our listeners to go and swoon over in the roadmap, but I think the numbers are just a superb example of the sort of deals that we should all be trying to do. It's perhaps, in all honesty, not the most sort of eye-catching in terms of the amount of capital recycled, and I've banged this drum for so long. That shouldn't be the be all and end all of what we do at all. In fact, net cash flow and healthy yield are critical, because it's the yield that gives you the margin when things like costs go up or when interest rates go up, as we're talking about. So you've got a 10% gross yield on this project across three flats, which in itself reduces a huge amount of risk for anything. This could be a project where maybe on a commercial valuation you could have pulled out a lot more capital, taken a commercial, maybe geared it commercially. But of course, that would have increased your interest rates and your borrowing costs. That would have reduced your yield. And then all of a sudden, when you're staring down the barrel of maybe 4, 5, 6% interest rates, which doesn't look like doesn't look impossible now in the next 12 months, the picture of the deal can look quite different. And I think, for me, in the last decade, it hasn't been any more important to make sure that our deals are well balanced. Good yields, good, healthy, strong cash flow, good locations, good spec. All of that stuff. And it's great to see this example in yours and what you guys are doing in Liverpool. It's been a real pleasure to have you on the show, guys. Thank you so much for coming on. Before we wrap up, I'm desperate, Brian. I suppose your role as a sort of principal contractor.
Yeah.
And perhaps, this isn't relevant to everybody because, you guys are, as you said, quite specifically in Liverpool and in an area of Liverpool. But this is quite unique because to get, and I can personally recommend you because I work with you so closely on the mastermind. But I think a lot of people might be quite interested in talking to you about some of their projects in Liverpool. How should they contact you? What's the best place to to have a chat and speak about whatever it is that you might be able to help them with?
Yeah, so there's a couple of ways really. So we're really active on Instagram. So Skaus_house. You find us on there. You can also check out our website, so scoushouse.co.uk. And then if you want to drop me an email direct, so it's just brian@scoushouse.co.uk. And if you want to reach out and say hi, or if you've got any particular questions, just reach out. That'd be great.
I'm sure your inbox will be filling up in no time. So, hey guys, it's been an absolute pleasure to chat with you guys about shop. As always, I can't wait to see you at the next mastermind. And you know what? I really, really, really cannot wait to see what this 8-bed HMO looks like. I think we're gonna have to get you back on the show to do another case study because I know that it's going to be pretty epic. But thank you so much for coming on the show. Thank you for sharing your story. Thank you for talking to us about project management and what's involved. And thanks for kind of taking us behind the scenes of Skaus House.
Thanks so much, Andy. Thanks for having us.
Brilliant. It's been a pleasure. Thank you.